Jessica, next time I'm gonna give her a principal's test. I don't know how to reverse this. I'm gonna set this on books and take my class the next time my principal's to take a test. Plus, I'll stay in here and I'll reseat them and I'll get their cell phone. I cannot have that cheating. But there's a way to reverse the camera on here, and I don't know how. I'll have to find out. Something really easy. Okay, we're going to have a test Thursday. It's only going to be 33 multiple choice. And of course, you can have your book and you can have your notes. You can bring a CPA with you. What have you.
We can this time?
Mr. Imo was telling me about your old test.
Yeah, they're not good.
What?
I said, yeah, they're not good.
How do you know?
Because I know.
How do you
Because
know?
we took it.
Because we know.
Well, he said the highest number correct was 28 out of 50.
I
Now,
believe
if
it.
you don't give a curve, that means the highest grade was 56.
I believe that.
Only 40 of them count.
Yeah.
Only
Only 40 of them counted.
Well, now 28 times 2.5.
Still not good.
And he says when we went through a text bank, he picked 40 easy ones.
So the highest score is a 70. 20 out of 40.
You know, 28 out of 40, you multiply by 2.5. 28 times 2, 56. Now 28 4 be 70. Not good, is it? Of course, he'll curve it or whatever he has to do.
I know mine was way lower than that. I know that.
Who made the 70? Somebody did.
It wasn't me.
Willie?
Yeah, maybe William.
William pretty good in there, maybe?
Yeah.
He finished the first one. He was the first one to finish.
Yeah, he was the first one finished.
Well, hope everybody did okay. It turned out all right, but when I give a test, if everybody flunks it, I feel like it's my fault. Sometimes it's the student's fault if you got a bunch of don't study. But I think maybe most of y'all studied some. Okay, some questions on a tax test. Jessica, starting with you. A partnership must generally use the same tax year as its principal partners. Must generally use the same tax year as that of its partners. I would think it was true, but it is false, what this test says.
Because didn't it have to be within like so many months?
I always,
something?
yeah, they said conformity, but I always say if you're in a partnership, have the same tax year as your partners. From my point, it's a must. But from IRS, it's not.
So for the test, it's false.
Right.
Okay.
A fiscal year is a 12-month period that ends on the last day of any month other than December. Now, Alexandra, a fiscal year is a 12-month period that ends on the last day of any month other than December. December's a calendar year. What do you think? True or false?
True.
It is true. He guessed and got it.
The December part was what's kind of throwing me off a little.
Yeah.
Yeah.
All right. This is a multiple choice. This CPA Associates is a cash basis partnership with a counter tax year. Signs a contract for a 20-month subscription to an online tax service. Effective as of April the 1st. The firm pays the full $10,000 subscription bill on April. All right. golly, for 2018, the firm can deduct, let's up these year days to 19. So how much of that 10,000 can they deduct if they paid 10,000 for subscription? Let's see, how long is it good for?
20 months.
It's good for 20 months. How much of that 10,000 can they pay?
Just in 2019 or
2018, if they paid it in 2018.
If they paid the full amount, it's only like the amount they accrued, right?
Yeah.
So that'd be,
No, that'd be on accrual basis. Here it says on the cash basis, they can take the whole team.
oh, okay.
Because the benefit is completely realized by the end of the next year, then you can take the full amount. So 18 and 19, it was fully realized, so you can take the whole amount. I hadn't seen that in your book. That's why I'll
I
go
think there
over.
was like an exception to that.
Yeah.
Yeah,
but-
it's an exception. Anybody? I hope I've got all this question. 30-month subscription to an online tax research firm effective November. The firm pays the full $15,000 on November. November the 1st is the start date. How much can they deduct out of that $15,000? Now the answer to this one, I don't have the rest of the question. They prorated it. How many months did I say it's good for?
30, right?
It doesn't say. It must be good for 15, November, December. Trying to figure out how many it's good for. I don't know how many months it's even good for, but the answer was 1,000. But there's no way to calculate it. For tax purposes, the lower cost of market must be ordinarily be applied to each separate inventory item. Do you have to apply inventory methods to each separate item? You don't? What if you've got, what if you've got CDs and you got cassettes and you got,
I was thinking, for some reason, I was thinking group.
yeah, it has to be to each separate one. When accounting for a long-term contract, all of the following accounting methods may be acceptable with the exception of which one can't be. Now, the modified percent of completion method, the percent of completion method, the completed contract method, the allocated completed method of accounting.
What about those methods?
Now, listen, when accounting for long-term contracts, all of the following accounting methods may be acceptable. But which one? Now, is the modified percent of completion method acceptable? Yes. Is the percent of completion method acceptable? Yes. Is the completed contract method acceptable? Yes. So which one? The allocated completion method of accounting is not acceptable. The taxpayer exchanges an office bill held as an investment for an office building to be used in her business. The exchange will qualify as like kind. You got it as an investment, it might have been rented. Now you want to use it in your own business. Is it still a like kind exchange? It's all for investment or business. It is a like kind exchange. If a exchange qualifies as like kind, non-recognition of gain or loss is elected. True or false? Is it elected? If a exchange qualifies as like kind, non-recognition of gain or loss is elected because of the loss.
Yeah.
The loss thing is not elected. You got to take it. Now, the gain thing, I would like to postpone it. You can take it all now if you want to. Now, real property exchange for personal property, both held for business, qualifies as a like kind exchange. Real property for personal, okay, can I trade you land for your car? It don't qualify. Okay, so the answer's false. The purpose of non-taxable exchanges, cash and none-like property constitute boot. True or false? Cash and none-like kind property is boot. If each party in a like kind exchange assumes a liability to the other party, only the net liability received is boot. I take over your $2,500 liability, and you take over my $2,000 liability. Did you get $500 boot? I took over, yeah, you got the difference. We didn't discuss that. The taxpayer may elect to defer recognition of loss resulting from an involuntary conversion. So now, if a flood takes out your house, that'd be an itemized deduction, which would be a cash loss. But let's say a flood took out your business warehouse. Do you have to recognize a loss? Yes. You have to recognize those losses on everything. Now, you're going to have to compute self-employment taxes, so make sure you got those percents down. Make sure. Or that 90-something. We know that Social Security is 12.4, self-employed, and Medicare is, how much? Medicare is 2 times 1.45, so it'd be 2.9. Now, you're going to take decimal 9.2% of that, or of the amount. Just keep that in mind. Or if you had 50,000 income, take 92-point-some% of that. 3 ways you can get that net. But you'll have your books, you'll have those rates. No self-employment. The adoption credit based on qualified adoption expenses is generally allowed in the year the adoption is finalized. I paid $10,000 last year, 19. I'm paying $10,000 this year in 20. The adoption is finalized in 20. When can I take the 10 and the 10? In the year finalized, that'd be true. Somebody they had on American The Voice. Y'all ever watch The Voice? I think he was 41 years old. He and his wife had 8 kids. They adopted a couple of Korean kids. So a lot of people do adopt. If you go to Russia or somewhere to adopt kids, it's expensive. Okay? But now, I guess it's okay if people adopt. Just if you're adopt, what kind of kid would you adopt?
I don't know.
A lot of people like to adopt kids of different races. I don't know if that's good for the kid or not, but it shouldn't hurt them. So, anyway, the adoption credit based on qualified adoption expenses is generally allowed in the year the adoption is realized and finalized. That's true. Jane and Claire's daughter is starting her freshman year of college. They will be able to claim the American Opportunity Tax Credit for a percentage of the cost of her tuition, required fees, and course materials. But the room and board charges will not qualify. True or false?
True.
True. Tuition and books and fees. So when y'all get a 1098T and it's got tuition on there, it don't have the books, does it? And don't have any fees that you may have paid. Up here, I think in your tuition is added on some kind of student activity fee, and I think if you take certain courses, don't they have fee on, certain online courses?
Business live fee and stuff.
Now, what is a flat fee? If you wanted to take accounting totally on the web,
I think it's
Right.
just $60. I think it's just the $60.
you know, I don't know why, cause the instructor does a lot less work. You don't get contact with an instructor, you don't get to ask questions. Computer usually grades your tests. I set up one time in accounting, and I had a woman out of Norfolk, Virginia in my class. If she couldn't get me in my office, I don't care if she called on Sunday. If she couldn't get a hold of me, then the next day she'd call my dean, and so on. And when I did talk to her, she had a bunch of kids in the background crying. I couldn't hardly hear her or help her. But anyway, not occasionally, but once in a while, you get a bitch in class. Or a butthead, whichever. I'm just reading you all some examples of what's on the test. Okay. Bud and Sheila are married. They file a joint return. They have one child, age 3. Their combined AGI is $35,000. Bud and Sheila incur $3,500 of child care expenses. During the current year, the child dependent care is how much? You'll need that chart. This H was C, $750, because they made $35,000. You only get to take how much per child? How much? Is it 3,000?
I think it's either 2 or 25.
No, I thought it was 3,000 expenses for up to 2 kids, which would make 6,000. And if you're in 20% bracket, 20% of 6,000 will be 1,200. That's the way I read it, but get that chart and make sure. The answer here was 750. That much. What is 25% of 3,000?
$750.
We're probably in the 25% bracket on the chart. It's probably 3,000 times 25%. Couple more. Joe is single with a modified AGI of 84,000. Is sending his son to his first year of college. The total tuition related payments during the year is $18,000. Joe has not taken advantage of any other type of tax credit related to education. What would be his American Opportunity Tax Credit? He paid $18,000. What's the most you get?
That's 2,500.
You know,
You get 2,000,
and then
and then 50%
of the next 2.
over the next, so that gives you 2,500 max. 20% of the next 1,000 if you spend 1,000.
Yeah.
I mean, 50%. If you spend only 500, it'd be 250. All right. Now the answer here is 1,500. Why? Their AGI is 84,000. Does that reduce it?
Yes.
Have to, wouldn't it? So be careful and look at those charts. Now if I gave you alternative minimum tax, AMT, just put answer A. I won't. If I don't go over it, I don't hold you responsible. If I gave you an AMT, put answer A and I'll count it right. I'll put answer A on my test schedule. Now here's one a taxpayer will be eligible for earned income credit if he or she has disqualified investment income of more than $3,500. This says 18, but we're going up to 19. this qualified income includes all the following except, this qualified income. A taxpayer will be ineligible for earned income credit. Now, we know what earned income credit is. Jessica goes out there and works at, Grants, and that's earned income, isn't it? Say if you work over somewhere, that's earned income credit, isn't it? Okay? Now, which one of these are not earned income? Capital gains? Not is. It's interest? Interest? What is that? This qualified income includes all the following except. Capital gains doesn't qualify. Interest does not qualify. Tax exempt or not tax exempt. Rental income does not qualify. But now self-employment income qualifies because it's earned income. That fellow that you were doing, I think I got a phone call from him.
Jacob Bishop.
Yeah, I don't even know what it said. If he comes in, we'll file it. If he don't, we won't. You got it in progress, right? All right, one last one here. It's on residential energy credit. Which of the following statements is not correct regarding residential energy credit? We didn't go over all those real good, but now some woman brought in, they bought a new furnace. Now I know one time I bought a new refrigerator, it's energy efficient, I gotta take it, but you can't do that now. So it's only certain things, so let's see which one it is not. It's not correct. All right. Credits earned but not used in the current year can be carried forward to the next year. That is true. You can do that. The taxpayer basis in the property is reduced by the credit. All right. If you did get to take solar heat and it cost you $10,000, you got a $1,000 credit, does that reduce your basis? It does.
Yeah.
It would. Only solar property qualifies for the credit. That is correct. All the above statements regarding the credit are correct. So your answer would have been D. Only solar energy qualifies for the credit. How about that? Did we read that anywhere?
No, because solar, wind, it was solar, wind, geothermal heat pump,
I
and
think
something
that's a wrong
else.
statement.
Yeah.
Only. Should have left out the word only. But it did. I think it was wind, solar, geothermal.
Yeah, wind, solar, water, and geothermal.
Heat under the earth,
Yeah, is.
water, wind, solar.
Yeah.
All right. And we don't know of any resident that supplies their own nuclear power, do we? All right. That's a review of the test. Now, we'll go into chapter 14 and look at some questions on credits. That's where we were last, or I think we may have done enough on credits and then what we've done today. So I'm going to go ahead and start looking at another chapter. And I don't have my PowerPoint with me. I left my jump drive at home. And I do have probably, we got to get off to chapter 13. It will not be on the test. And we're talking about recapture. I want you to turn your books to page 3, 13:3. All right, so that's where we are today. Now, if I were bringing up, let's see how good my internet works in here. Let me bring up one form. And we get IRS. But my internet's working real fast in here. But it's not in my office. Somebody said electricity was out this morning.
Yeah.
Alright, now, I don't know what form I'm looking for, but let's look on page 3. And when we do these gains and losses on 1231, it's not a D. But there's a form I put it on, procedures for treatment of, and I was going to see if the book had a form, recapture of credit. It is a taxable exchange. It's on depreciable property. 4797 is the form that I need, okay? Now, I swear I think we looked at this in the past, but if we did, not much.
Front TV isn't on.
The what?
Your front
Front
TV
TV.
isn't on.
Okay, we'll fix that. They automatically go off for some reason. If they're inactive, which is a good thing, I guess. A lot of these professors leave these rooms and leave everything on. It's a good thing the lights are automatic also. Because I would hate to know what the electric bill would be here each month. It would be in the thousands. I want you to look at this form a minute. I want you to look at this part of the form. Now, most of you don't have a textbook, so I can't have you turn there. And an e-book, we can't get it. So you need get a plain sheet of paper if you would, and label it Part 3 on Form 4797. Form 4797, label it Part 3. All right. Let's just put down your business truck. Number A, let's put truck. And the date acquired, just put January the 5th, 15. 1/5/15. Date sold. We'll make it simple. We'll make it 2/5/19. Automatically, that would be long term, wouldn't it? But not under section 1231. Okay, the best way to get you to see it is walk you down through line 25. Just down through line 25. Now the gross sales price of this property, we're going to put 25,000. All right, we're going to put cost of 40,000. If that's all we had to go on, we got a loss, don't we? But depreciation, you know, Some of these things will let me write on them and some won't.
What did you say line 20 was?
It's gross, gross.
So
All right.
25?
What did I say about 21? I said the cost was what?
40.
And 22, the depreciation, is 20.
But what was line 20?
Sales price, 25.
Okay, that's what I thought.
Now you do 23. Tell me what 23 is.
20.
How much?
20.
That's your basis, right? Because we paid what for it? 40? Depreciation was 20? So what's my basis?
20.
20. All right. Now, fill in line 24.
You step up.
Yep. 24.
5,000.
That's your gain then, isn't it? Now, ordinarily, it'd just be long-term capital gain. But not if you depreciate property. Now, if I bought stock for 25, 20 and sold it for 25, I've got a long-term capital gain, that's it. That has nothing to do with section 1231 or 1245, because this is depreciable property that we sold. A lot of small businesses, when they go out the door, they sell all their assets. That's depreciable property. All right. Fill in line 25A. What you got?
20.
All right. Fill in B. What you got? What you got?
5.
Still got 5,000. Hang on to it now. I better remember this form. All right. Total gains for all properties, add columns A through D, line 24. What was line 24? Come on.
Gain.
Fill in line 30. How much? 5,000? Right, Jessica? Add columns A through D, lines 25B.
5,000.
Still will be 5,000. Subtract line 31 from line 30.
So 0.
Enter the portion from casualty theft on whatever. Line 30. Enter the portion from other than casualty theft on line 6. Something didn't work out there. Total gains on number 30 was what? Total gains, line 24 is 5,000, right?
Yeah. It's where you use 20 for your line 22, I think.
But here it says subtract lines 25B. Okay, right here. Add properties, lines 25B. Enter here on line 13. Right here, 13. So now let's go to line 13, which you don't have. Now you read 13 to me. What is it? What would you put on line 13?
I can't read it.
What?
I said I can't read it.
Jessica. I thought you had good eyes.
No.
Well, where's my little thing to blow this up?
Right there.
Where?
So the plus sign.
Up here?
No, down in the corner.
Bottom right.
I go to the right.
right there.
Oh, right there.
Yeah.
Now can you read it?
Gain infinity.
Now?
I read the line. It was gain if any.
All right, but I want to make sure. Okay. All right, line 13 was,
Yeah, you got to scroll down.
all right, now I do, don't I? Now what is line 13?
5,000.
Gain if any. Now, what does it say right here?
Ordinary gains.
Ordinary gain. It's an ordinary gain because it was recaptured depreciation. Now, did IRS let you take that depreciation off as an expense? And if you were in a 30% tax bracket, how much did that depreciation save you? 30%. They're not going to give you a long-term capital gain and let you only pay 15%. Now, we're going back to the back of the form again. All right, line B, we're going to put down dozer. Line B, we're going to put down a dozer. We're going to acquire it and sell it on the same date. Same date as line A. That makes it long term, don't it? All right, 20. We're going to sell that dozer for 100,000. Line 21. We only paid 90,000 for that dozer. We all know a dozer don't depreciate much, does it? And they do go up in price. We'll talk about China. I think some things we get will go up in price or they'll be scarce. You remember your economics, supply and demand is going to kick in. The supply is scarce, the prices will be higher, and demand's still high. The market is down 300 a day. Yesterday at 1100, that's 1400. That's a big drop. Now, it hurts us here at Bluefield State because we've got our money in the stock, our retirement, going down. My Disney stock went down from 141 a share to 130 a share. So yeah, we're losing on paper. Okie doke. Depreciation allowed on $10,000. Now fill in the next few lines. You see, the first item was section 1245 property. It was ordinary gain. Are you with me? Okay. Now, where did you get to here? What do you have on line 24?
20,000.
How much?
20,000.
The adjusted basis is what? 80. Sales price is 100. All right. What are you going to have on A and B here?
10,000 and 10,000.
How much was depreciation?
10,000.
Enter smaller 24, 25?
10,000.
10,000. All right. Now listen up. Okay. I want you to erase lines 30 and 31. Now we got two items. Okay, now read 30. Is that 25,000?
Yeah.
All right, how about 31? How much?
15,
Now, where are you gonna take that 15 to?
line 13 on the front.
And it's gonna be ordinary income. Recapture depreciation on the first machine was 5,000. Recapture depreciation, Jessica, on this machine is the 10. So if you sell an item above its original cost, which we paid 90, we sold it for 100, we got a $10,000 long-term capital gain, which is section 1231. Does that make sense now? All right. Now what does this line say? Subtract 31 from 30. What does that leave us?
10,000.
10. Enter it here on line 6. All right, what's line 6 say?
Gain, if any, from line 32, other than casualty or theft.
All right. Enter it as long-term capital gains on Schedule D. So, look up here. Sale or exchange of property using trade or business that involves a conversion other than cash or sale held for more than 1 year, and you can see all these section 1231s down through here. So we got a 1231 gain, and we're going to put it on Schedule D. And we've got down here on line 13, 25,000. That's $35,000 gain, right? What was the gain on the dozer?
10.
No, it's more than that. Altogether, we sold it for 100. His basis was 80,
20.
and the gain on the truck was 5. That's 25. 10 of it went here, long term. 15 of it went here, ordinary. Not short term, but ordinary. It's not even a capital loss. So, if you sell something for more than you paid for it, you got a long-term capital gain. If you sell it for less than what you paid for it, you'll have an ordinary gain because of recapture or depreciation. That's what this chapter is about. And that form explains it about as good as anything. So, all I want you to do is read this chapter for coming Tuesday. Now, I'm not going to worry too much about I'm worried about section 1231 and 1245. They're the most common. Now, we may look a little bit at section 1250. That's straight line. Real estate, houses. If straight line depreciation is used, they're zero except for corporate subject, what have you. But anyway, that would probably be real estate depreciation. Well, we could have used straight line. So we may look at that, and that's all. We will not look at 54 or 52. 52 is for farmland, hardly ever used. Soil, water, and land clearing expenses. And 54 is intangible drilling. We won't be doing those returns. And 55, applicable percentage of payment excluded from income under section 126. I don't even know what section 126 is. I have to look it up. All right, so forget about these sections when you read the chapter. And that's it. I'm going to call it a day. I got to get my computer in my office working and answer a bunch of emails. And so forth. So the test is Thursday. We'll look at this chapter on Tuesday. And you're free to go on Tuesday today. And Jessica, you have to run to work?
Not until 4.
That's not bad.
I actually get